Greetings traders and welcome back to another survival guide. Chris here bringing you some more information, and this information today will come in the form of how to build a successful trading plan. This is something that is crucial to becoming a successful trader. They absolutely go hand in hand. So if you think that you have what it takes to pass the Gauntlet Mini, then listen up, because we need to make sure that you have the highest chance of possible to pass, because it's not gonna be easy. We'll go step by step through the entire process, so take some notes, enjoy the ride, and let's get going. If you're looking to trade futures or stocks or Forex or really any other type of investment, you must have a trading plan. In simple terms, this is a roadmap that determines the number of factors that we will consider and accept before moving forward with whatever investment that we might have. So let's move forward. The definition of a trading plan, as the textbook will tell you, is something that is a pre-planned method for identifying and trading securities that takes into consideration a number of variables, including time, risk, and the investor's objectives. These three things are the core of what a trading plan is, and it's something that allows us to be prepared to handle and manage all of these things to our advantage and be prepared for even when those circumstances arise that may not be something advantageous for us in the short run. We're prepared to handle those as well, which further mitigates the damage. The main factors that we want to consider when putting our trading plan together include entry rules, exit rules, risk management, and size of positions. Even just a glimpse of these issues will likely have your mind working overtime, but the concept can be broken down and be thought of in a very simple manner. If we break each of these down into one subcategory and go through the process step by step, you'll soon see that it doesn't have to be that complicated or that much of a burden to think about. Many people fail to recognize that it is just as essential to have a selling or exit strategy as it is to have an entry strategy. There will be occasions where we need to bite the bullet, cut our losses, and get out when it's not going our way. That's just a fact of trading. So the concept behind a trading plan is to allow us to make sure that not only our wins are planned as well as our losses. Our losses are also pre-planned in a way that is allowing us to limit the damage that they cause. As far as the creation process of the trading plan goes, it's going to be dependent on whether or not we're talking about a short-term trader or a long-term trader, because both paths are going to be quite a lot different. Let's start by talking about short-term traders. They will place great emphasis on technical analysis, and they'll incorporate the likes of trend indicators, momentum indicators, volatility indicators, and volume indicators. This is something that is more characteristic of a short-term trader. Whereas with long-term investors or long-term traders, they're more placing emphasis on things like long-term returns and taking advantage of a price fall to find a longer-term rise out of it, and they're regularly analyzing the performance over a long period of time over each fund before making their decision. Long-term investors still have a trading plan, but oftentimes it's not as in-depth of a day trader's trading plan. So if you're a short-term trader like a day trader, it's all the more important to make sure you have a trading plan dialed in. And if you're a long-term investor, it is also important. However, it won't be as detailed as a short-term trader's plan. The first step to creating a trading plan is to make the most of your skills. What I mean here is make sure that whatever you're trading, you actually have some type of genuine interest in. The reason that this matters is due to a psychological nature. Even if we are particularly good at a certain trade, if we like one area of that trade particularly more, and if our skills are even, we're generally going to perform better on the thing that we like more, because we spend more time in it, we're more invested in it. So we want to try to find something to trade that we actually have some kind of interest in or generate some interest in it. Then step 2 is to stay focused. This is relatively self-explanatory. We need to make sure that whatever it is that we're doing, it is something that is staying the course to what we planned on doing. Sounds simple, but is awfully difficult in execution. Any trader can attest to that. The third thing that we need to do is risk profile assessment. So with risk profile, this is something that we all don't feel comfortable at times thinking about because it is us imagining the worst case scenario for ourselves, but this is crucial to do. We need to imagine the worst case scenario, be comfortable with what that worst case scenario is. That way we can get a real idea of the most amount of risk that we're under to take at any one time. The next thing that we need to do, step 4, is respect fear and greed. Fear and greed are both powerful motivators. Emotions often hinder trading. Usually, it's not something that's helping us out. Fear and greed are two of the most powerful emotional responses that a trader generally might feel on a day-to-day basis. They might feel fearful that a position is going far against them, and it might cause them to close the position out before their pre-planned stop loss, or they could have a position going in their favor, and they could let it run longer because they feel so confident about the money that's coming that they're avoiding their trading plan, they're going beyond their take profit level, and as a result, the market could end up bouncing down, and unfortunately, they wipe out all of their earnings and potentially even stop out. So we need to respect fear and greed. Step 5 is to do your research. It doesn't matter what it is that we are trading. It doesn't matter if it's a stock. It doesn't matter if it's a futures contract. It doesn't matter what it is. There's always some degree of research that can and should be done. Find out as much about what you're trading as possible because it might give you some insight in what to expect in either short or long-term trends. Then that brings us to step 6, is where we monitor those trends. We want to pay attention to the short and long-term trends. And remember always, folks, the trend is your friend. Then comes step 7, which is where we plan our exit. This is that idea where we're going to pre-plan our exit both in good and bad scenarios. A stop loss is still a planned exit location, even if it's not the exit location we want. Then we have take profit locations, and this is when everything goes well. We'll have a plan to get out so we're not just letting it run forever and wiping away the progress that has been made. Then we have number 8, which is abide by the rules. The rules mean pay attention to the rules that you have set forth for yourself for your trading plan. This means if you don't trade, if you have lost more than, say, 5% on your account today, that means when that happens, you must stop trading. Any rule that you set forward for yourself, chances are you're setting forward because you know it will help you. So listen to those rules. And then finally, step 9 is log it all. It's important to record everything. Trading journals are a must. Record your results, good, bad, or indifferent. The only way you can improve upon them is if you have past data to compare to start analyzing your own personal trends. Having a trading plan is an integral part of becoming a successful trader. I actually encourage you in your spare time to find any long-term successful trader that did it without any use of a trading plan, for that matter, in any way, shape, or form. I personally wasn't able to find a single one. You might be a better researcher than I, and it could be some fun homework for you. But until next time, folks, I wish you the best of luck in the markets, and those of you that are embarking on your Gauntlet Mini journey, good luck. You will do just fine. Just stick to the things that we always talk about, and I'll be here waiting on the other side. The rest of you, please click that like and subscribe button down below so I can keep coming out with content for all of you. And until next time, I'll see you soon.